Bitcoin just decoupled from the system, and the elites are panicking. ARK Invest just cranked up their Bitcoin prediction to $2.4 billion by 2030. That's up from their previous estimate of $1.5 million. According to their analyst, institutional investment is driving this rocket ship, with Bitcoin potentially capturing 60% of gold's market cap. Gold's been around for thousands of years, but Bitcoin is eating its lunch. And the proof is in the digital pudding. Bitcoin ETFs just gobbled up $2.68 billion in net inflows this week, putting Bitcoin on track for its strongest weekly performance since Trump won the presidency. Michael Saylor, the man who never met a Bitcoin he didn't want to adopt, says BlackRock's Bitcoin ETF will be the world's biggest ETF in a decade. Translation: Bitcoin is no longer your grandpa's risk asset. Speaking of Bitcoin, it has officially decoupled from traditional markets. Stocks staggered. Gold went sleepy. Meanwhile, Bitcoin hit the gym and made new friends, nation states, and pension funds, and took your 60-40 portfolio behind the woodshed. Wink, wink. Wall Street finally realized that bonds are just slow-motion theft. In other news, Tesla. What crypto loss? Elon Musk's Tesla forgot to mention a $97 million crypto loss in Q1 adjusted earnings. That little magic trick bumped its earnings up by 12%. Because why report real numbers when you can just LARP as profitable? Now look, can we give the man a little break? Elon's been a bit busy, one would say, uncovering billions of dollars in government fraud funded by our tax dollars. You think you're tired from work? Try peeling the lid off of a century's worth of deep state rat's nests while running SpaceX, Tesla, and babysitting the SEC. That's his hard-earned money getting wrecked in crypto markets, not ours. Unless you personally PayPal'd him rent for a Tesla Cybertruck, maybe sit this one out. Let the man cook. Meanwhile, Tesla still sits on a $1 billion Bitcoin stash, and no amount of financial yoga from Bloomberg or the SEC is going to change the fact that one of the richest men on earth bet on Bitcoin over bonds. That should tell you something. SEC Chair Paul Atkins, bless his heart, just showed up to the agency's third crypto roundtable, talking about huge benefits from blockchain technology. That's right. The SEC finally hired someone who doesn't think crypto is just internet money for criminals. Must have been awkward for half the room when he mentioned clear regulatory rules after years of the SEC playing regulatory whack-a-mole under Gary Gensler. Atkins says that he wants to work with Trump's administration to set up rational crypto rules. Respect. Which essentially just means less paperwork, more freedom. Critics, mostly still emotionally injured from 2016, think he's too cozy with crypto. Apparently having basic comprehension of Bitcoin is now considered a conflict of interest in DC. Maybe they just missed the SEC days when innovation got strangled in its crib. Meanwhile, stablecoin giant Circle is out here saying no thank you to becoming a bank. Their strategy guy Dante Disparte straight up denied they're seeking a federal banking charter. Smart move. Once you become a bank, you gotta play by bank rules. And those rules ain't written for the common man, bruh. And finally, the Swiss National Bank just rejected a proposal to hold Bitcoin, saying it doesn't meet their high requirements. You know what those requirements are, right? Must be easily debased so we can silently tax the peasants through inflation. Must enable complete surveillance so we know who's buying what toilet paper. Must be controllable so we can freeze accounts when someone posts a meme we don't like. And above all, it absolutely must lose purchasing power every year. Heaven forbid the average citizen actually preserves their wealth. You know what Bitcoin won't do? It won't sit quietly in their vault while they play monetary games with people's life savings. It won't let them print more whenever their banker buddies need bailouts. In short, Bitcoin refuses to join the World Economic Forum's sad little cabal of melting currencies. Switzerland just admitted it values control over truth. Big shocker from the guys who accidentally lost half of Europe's gold in the 20th century. Don't worry though. When Bitcoin's 1 million plus and they're scrambling to buy, they'll call it a long-term strategy. Because somewhere between BlackRock's boardrooms, Elon's spreadsheet, and Paul Atkins' regulatory olive branch, the decentralized revolution keeps building. quietly, relentlessly, while central banks clutch their pearls and reject what they can't control. Bitcoin doesn't care. It marches forward without asking anyone for permission. So stay sovereign, stay sharp, and have a great weekend. We'll see you on Monday.